And without further ado, I think we're going to get going. Suzanne?
Welcome and thank you for attending today's Technical Assistance webinar. The webinar is presented by Amity Foundation, acting as the third-party administrator for LA County's Justice, Care, and Opportunities Department and the CFCI CARE Grants. The CFCI CARE Grant First Community Investment Grants are the result of ballot Measure J voted in by LA County residents in 2020. Care First community investment funds are intended to be invested directly into communities and alternatives to incarceration that address the negative outcomes caused by racially driven criminal legal system inequalities and long-term economic disinvestment. Please note the following legal disclaimer. The material presented does not constitute legal advice and is only intended to provide information. Organizations and individuals should independently verify that any information presented is appropriate or applicable to their situation before acting on it. Next slide, please.
I'd like to introduce you to today's presenters. My name is Mina Carrion, and I am the Training and Technical Assistance Coordinator for Amity Third Party Administration. I'll pass it over to Suzanne.
Hello, everyone. I'm Suzanne Dave, and I am the Grant Project Assistant for Amity's Third Party Administrator. Rebecca.
Thanks, Suzanne. Hi, everybody. I'm Rebecca Gray. I'm the Grant Administrator for Amity Foundation's Third Party Administrator. I'll pass it back to Mina.
Thank you. At Amity, we incorporate teachings that center the community before we begin our work. Today, we will use the LA County Land Acknowledgement to recognize the price paid by individuals that has resulted in efforts such as Care First community investments. We recognize that we occupy land originally and still inhabited and cared for by the Tujunga, Tatviam, Serrano, Kis, and Chumash peoples. We honor and pay respect to their elders and descendants. We acknowledge that settler colonization resulted in the genocide of the First Peoples. This acknowledgement demonstrates our responsibility and commitment to truth, healing, and reconciliation, and to elevating the stories, culture, and community of the original inhabitants of LA County. Next slide. So, this PowerPoint summarizes the main annual filing forms, what forms to file, due dates, and potential ramifications for failure to comply. A California nonprofit public benefit corporation is required to file several forms each year to remain in good standing as a nonprofit and maintain your 501c3 status. California nonprofits have many forms to file each year, some with various departments of the state of California, others with the federal IRS. Key state offices include California Franchise Tax Board, determines along with the federal IRS whether an organization qualifies for tax exemption and whether donations may be tax deductible. The California Secretary of State oversees requirements for transacting business within California, and the Attorney General's Office, which regulates the registration and reporting requirements for charities and fundraisers operating in California through its registry of charitable trusts. Lawyers and auditors in its legal division, investigate complaints and enforce laws related to nonprofits. Next slide.
Why these forms are crucial. The IRS and the applicable California state agencies require regular reporting to assist in their duties to monitor nonprofits and enforce applicable legal requirements. These annual filing requirements must be met to avoid penalties, suspension of the nonprofit's right to conduct business in the state, including raising and spending funds, and even revocation of its federal or state tax exempt status. Next slide, please.
Rebecca, you're on mute.
Thank you so much. What annual filings are required for a tax-exempt California Public Benefit Corporation? So these are some of the files required, some of the filings required of you as a California nonprofit. The first is the Internal Revenue Service Form 990. So IRS Form 990, this includes the 990, 990EZ, 990N, or 990PF. The IRS Form 990T is required only if the nonprofit has more than $1,000 in unrelated business taxable income. So that's a very unusual one. For the 3 years that we have run the application process, we have never seen a 990T. So just understand that is an unusual form. California Franchise Tax Board, the FTB Form 199 or 199N is required. California Registry of Charities and Fundraisers. So in the state of California, if you are a nonprofit, legally, you are required to form the RCF Form RRF-1. And every other year, you are required to file the California Secretary of State's Statement of Information. The Statement of Information form is SI 100. Both of these forms are available at the California Secretary of State. Next slide.
So, what is the breakdown of required forms? Next slide.
Form 990 and its variations, which to file. A nonprofit must file an annual information return or notice with the IRS unless exception applies, such as for churches. The Form 990 series is the IRS primary tool for gathering information about tax-exempt organizations, educating organizations about tax law requirements, and promoting compliance. Organizations also use Form 990 to share information with the public about their programs. Additionally, most states rely on Form 990 to perform charitable and other regulatory oversight and to satisfy state income tax filing requirements for organizations claiming exemption from state income tax. So Form 990 is for public charities with gross receipts of $200,000 or more, or gross assets of $500,000 must file Form 990. Although any public charity may choose to file the full Form 990. Form 990EZ is for public charities with gross receipts of less than $200,000 and assets less than $500,000 in a given year, are eligible to file the streamlined Form 990EZ. Form 990N, the simple e-postcard filing, is available to public charities other than supporting organizations with gross receipts, normally $50,000 or less. Normally means a 3-year average. However, Form 990N may be filed in the organization's first year if gross receipts are $75,000 or less, and in the second year, if average gross receipts are $60,000 or less. Form 990PF is required for all private foundations. Next slide, please.
Nonprofits must determine which Form 990 variation to file based on your organization's size and type. Exempt organizations use Form 990T to report unrelated business income, figure and report unrelated business income tax liability, report proxy tax liability, claim a refund of income tax paid by a regulated investment company, RIC, or a real estate investment trust, REIT, on undistributed long-term capital gain, request a credit for certain federal excise taxes paid or for small employer health insurance premiums paid, report unrelated business income tax on reinsurance entities. Next slide.
FTB form, California Franchise Tax Board. Nonprofits must apply with the FTB to obtain tax exempt status in California separately from the IRS application. Similar to the Form 990, the organization size and type will determine which form to file. Form 199, all organizations, both public charities and private foundations, may file the full Form 199. Form 199N are organizations with gross receipts that normally do not exceed $50,000 are eligible to file the simplified Form 199N. FTB Form 109 must be filed by all California exempt organizations with unrelated business income that is more than $1,000. Next slide, please.
So the RRF1 form and the inclusions. So California's RCF uses the information collected on the RRF1 form to administer and enforce the Supervision of Trustees and Fundraisers for Charitable Purposes Act. In addition to routine monitoring of charities, the Attorney General may use this information gathered on this form to conduct investigations and law enforcement actions. Forms a nonprofit must include when filing the RRF1 are normally a copy of the organization's Form 990, 990EZ, or the 990PF. The 990N filers must include a copy of the RCF's form, CTTR-1 with their RRF-1 in lieu of a variation of Form 990. In addition to RCF's Form CT-694 is required by each organization that collected more than 50% of its annual income and more than 1 million in charitable contributions from donors in California and spent more than 25% of its annual income on non-program activities. So, who must file a Form RRF-1? Every charitable nonprofit corporation, unincorporated association, or trustee holding assets for charitable purposes that is required to register with the Attorney General's office is also required to annually file a Form RRF-1, even if the corporation does not file a 990 form annually or is not extended in reporting with the IRS. So only those charitable entities and trustees required by law to register with the Attorney General are required to file Form RRF-1. So entities exempt from the filing requirement include a government agency, a religious corporation, a cemetery corporation regulated under Chapter 12 of Division 3 of the Business and Provisions Code. So a political committee defined in Section 82013 of the California Government Code, which is required to and which does file with the Secretary of State any statement pursuant to the provisions of Article 2 of Chapter 4, Title 9. A charitable corporation organized and operated primarily as a religious organization, educational institution, or hospital. A healthcare service plan that is licensed pursuant to Section 1349 of the Health and Safety Code and reports annually to the Department of Managed Healthcare. Corporate trustees, which are subject to the jurisdiction of the Commissioner of Financial Institutions of the state of California or the Controller of Currency of the United States. However, for testamentary trusts, such as trustees, should file a copy of a complete annual financial summary, which is prepared to the ordinary course of business. So for more information, definitely look at the probate code sections 16060 through 16063. Next slide.
SOS Form SI-100. This form is filed for the first time within 90 days after the filing of the initial articles of incorporation and then every 2 years thereafter during the applicable filing period. Every nonprofit corporation operating in California must file with the Secretary of State a Statement of Information, SOS Form SI-100, that identifies each of its top officers and its agent for service of process. Example, summons and notice of lawsuits. This form is filed for the first time within 90 days after the filing of the initial articles of incorporation, and then every 2 years thereafter during the applicable filing period. Next slide, please.
So due dates. So the IRS, FTB, and RCF forms are due on the 15th day of the 5th month after a corporation's fiscal year ends. A one-time automatic 6-month extension may be requested by the initial due date using IRS Form 8868, which may be filed online. A timely filed IRS extension request will extend the due date of RCF Form RRF-1 without the need of further action. The due date for FTB Form 199 is automatically extended for 6 months if your organization is not suspended on the original due date and the required return is filed on or before the extended due date. SOS Form SI-100 is due on the last day of the month of incorporation every other year beginning on the 2nd anniversary of your corporation's incorporation dates. Next slide.
Well, one of the reasons we're all here is that there are penalties for insufficient annual filing. So here's an overview of the penalties for insufficient annual filing. If a nonprofit does not timely file the required forms, the IRS and/or applicable California state agencies may assess financial penalties. In addition to financial penalties for late filings, failure to maintain the required state filings can result in involuntary dissolution of the nonprofit corporation, suspension of the nonprofit's right to do business, suspension of the charity's right to raise funds, and revocation of the state tax exemption. Further, if a nonprofit does not meet IRS requirements for 3 consecutive years, it automatically loses its tax exempt status. This last one, by the way, is the primary reason why an organization loses its 501c3 status, its tax exempt status. It's usually just an oversight. It's not filing for 3 consecutive years. Next slide.
So other mandatory annual filings. So other filings that you may be subject to are, raffle and gaming registrations, local business license renewals, if you have an organizational clearance certificate and welfare exemption renewals or local charitable solicitation annual reports. All of these you may have to do depending on what type of organization you have. Next slide. So reminders. So Amity will never send out tax documents for awards. So for all of our CFCI grantees, we will not send you any type of W-2 or anything that will assist you in completing your taxes, since all of our grantees are 501c3 or they have a physical sponsor that is a nonprofit or is an LLC. So don't anticipate us to send anything. Payment documentation. So for your funds that you receive, you should all know how much funding you receive in a particular year. You can either use your bank statement with the deposits as a document, or you can keep your check stubs that you also receive. If you don't keep anything, I recommend that you pull your bank remittance or the copy of the check, whichever one you received, and use that. Amity doesn't receive anything from the county or from anything. We only keep copies of the checks and the ACH deposits and record the revenue according to the contracts. So as an example, our CRC programming grant deposits in our account 3 times a year. We record the deposit as revenue when it happens, and then the expenses for the grant are documented with receipts and payroll reports. Next slide. So resources. So a great resource to find out more information and learn more information about everything tax related is of course the IRS website. So irs.gov, you can definitely check out the charities and nonprofits page, all of the annual filing and forms, and the tax information for businesses. Next slide.
Okay, we have made it to Q&A. I know that was a lot of information. Again, please drop your question in the chat. We're going to answer questions in the order in which they were received. Once we've run through all the questions dropped in the chat, if you don't hear the answer to your question, we can take Q&A when that is done. Suzanne, can you read the first question aloud?
Yes. First question says, will you be touching on rather the DE9 from the EDD are required?
So I don't believe, Mina, that's not part of the information we're presenting today. I think.
No, it wasn't, but I can definitely touch upon it. So definitely this is more related towards like payroll tax filings, and definitely your quarterly contribution return and report of wages, which is your DE9. This form is mandatory for all employers, including nonprofits in California. So it serves to reconcile reported wages and paid taxes for each quarter. Nonprofits are required to file the DE9 form every quarter. So you may need to electronically file this form. I would definitely recommend you look at the EDD website for more information. But yeah, that's for the DE9. I hope that answered your question.
Next question.
Next question is, will we get access to these slides? The answer is yes.
Yeah, you guys will definitely get the these slides and the recording.
Next question.
Will there be an opportunity to ask questions? Yes, this is the time to ask all of your questions. And it says, I would love to ask about UBI.
So UBI, the unrelated business income. So definitely you should be recording all of everything that comes in. Your accountant should be, keeping records of it. So for a nonprofit, the UBIT is imposed at 21% flat. That's the federal corporate income tax rate. The form, the FTB form 109, the form must be filed for years when you had a gross income of more than $1,000 from a trade or business unrelated to your exempt purpose. We could definitely send out more information in regards to that because it can get it depending on what type of organization you have, it can, like, the forms can differ. You might have to do a form 109 or a T990. So definitely we could send out more information in regards to that.
Next question says, this form is due before the 990, but requires a copy of the 990, correct? Catch 22. So what form are you referring to? And this is coming from Community House.
They said the RRF1. So it's due, you wrote, it's due writing for, or it's due within 4 months after the end of an organization's accounting period. So your period is the calendar year. Thus, our RRF1 is due by 4/30 and requires 990 to complete, but the 990 isn't due until May 15th. Any suggestions on this dilemma? Ooh. Hmm.
I would get your taxes in before both due dates. So if
Yeah.
one is due by April 30th, then you should definitely get your taxes in way before that date to satisfy both requirements. Let's see. Next question is, do you have someone with expertise at social enterprise and publishing the limits of UBI?
Pushing the limits of UBI.
Oh, yeah, pushing the limits of UBI.
Let's chat offline. Can you put your email in the chat and we can reach out to you? Matthew Weber. And And then someone did ask, where can we get the forms that we need to file our taxes? The IRS website actually has everything. So the beauty about in today's world is you can do all of this electronically. So if you go on the IRS website, when we send out this presentation, all of those highlighted links actually are they're linked to the IRS website. So it'll be very easy for you to just click on it and it will route you to the government website.
Next question is, my organization will need the simple form. Which form do we need? So, you should definitely look at, like this information with a tax professional just to make sure that you're following the required form. Because the information that we presented in this webinar, we spoke of if you're filing the simple form, then that means that your revenue is under $50,000. But you just want to make sure that you get clarity from a tax professional.
I believe our presentation did state though that the traditional one for a nonprofit is a 990, but definitely confirm that with your accountant, with your tax people.
Yes, because there's different versions of the 990. So the
Mhm.
simple one would be the 990N. So just verify that. The next question says, may we request a link for recording of this meeting and previous one as well?
We'll definitely send all of this out in our snazzy newsletter next week. So keep an eye out.
And someone asks, can you tell me which form I need? So once again, just verify that with your tax professional. And there are no more questions in the chat at this moment. So if anything comes to mind, please drop it in the chat, please.
Rebecca, could we go to the final slide, please?
Sure. So no other questions?
Amazing. So thank you so much, everyone, for your time. We appreciate you joining us and taking the time out to learn about the many, many information, routes of taxes and all of its quirkiness and funness today. So we hope to see you at a future webinar. Next week, we will have another one in regards to budgets, and it will definitely serve as the one that we had to cancel last week. So thank you so much for your attention today, and we hope to see you soon. Bye.
Thank you so much for being here. Bye.
Thank you. Bye.
I have a question.